Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today on, again, the New York session. And a lot of questions, a lot of emails the last few days about my videos about why I'm only trading New York now and the other 3-hour windows. And I just want to emphasize that there are trades in every session, and there are going to be some really good trades in some of the other sessions. And I'll just reinforce the concept of whenever a previous day's high or low, or a weekly high or low, or a monthly high or low are broken, which can occur in Asia or London, or we can get a high of the day opportunity in London, low of the day opportunity, that sort of thing. There are some excellent trades. My choice has been just tailoring down, again, more specifically, very specific to only certain trade setups for the purpose of, number one, not being at the screen. Number two, just really narrowing down very specific trade setups. And that has just been, really important to taking things to another level. The moves in the U.S., my belief, my understanding, my approach to the market is allowing the entire day to set up for my trade thesis. So there's going to be high of the day opportunities, low of the day opportunities. They occur on every single instrument. And when the setups are there, the best setups, as we've witnessed the last few days, there is some just massive moves on these indexes, commodities, the currencies. We've had the yen crosses moving, and they've been some excellent trend trades. But again, it's just my approach in terms of streamlining my own trading and just focusing on the best opportunities. So again, just to review, people have asked me, well, what about daylight saving time and all these other things? I work on New York time. I don't care if it's wintertime, summertime, daylight saving time, whatever time it is in New York, that's when I'm going to work. A lot of people keep asking me about, when London opens, why I use my 3-hour window for Asia. And, that's when the algos work. I don't care what you've read or what you believe about what time Tokyo actually opens and all that. The algo runs on New York time, and that's, stare at your charts long enough, you'll see the movements. There's going to be days it moves earlier. There's going to be days that it moves later. But again, at 9:30 in New York, that's when New York definitely opens, and that is after we have a full day's worth of trading. So I come to the screen, and I'm literally just looking at where is the high, where is the low. Am I inside? Are we down low? Is it a 3-day setup? Is it a 3-session setup? What is my thesis? Is this a playbook type setup? And that's it. I look at the pairs. Which one do I like the best? Which one's behaving? And then the first hour gives me my thesis for taking the trade at a price level. So these are all the things that, again, I reinforce to everybody. Build your playbook, know exactly what you're looking for. I've had traders tell me they like to short more than they like to go long. I'm like that. I like to go short. We've had some massive long trades the last few days. They're the same things when you understand just the basic concepts of what you're looking for. It gets easier and easier just to focus on certain setups. So it doesn't matter what instrument. There's going to be trades on everything. We'll review a couple from this week on some of the other currency pairs. Again, I'm looking at the high and the low of the day. First hour will either confirm that thesis or negate it, or if there's news, I have to wait. But usually the bigger levels, I haven't talked much about measuring distances, but everything is calibrated. Everything is measured. The box size, it could be 75 pips. It could be 250 pips. They might move at 500 pips. And then go 700 the other way. So these are all the things that you need to know about the instruments that you're trading. When there is a move from the high or low of the day, do not counter trend that move. Do not look if you've missed it or you don't realize that you've missed it. Do not counter trend the move until that market goes into consolidation or clears out highs and lows, and understand where those highs and lows are at. Because if you get in front of one of these moves, they can blow you out. I use the 15-minute charts. That's what gives me my thesis for the day. As I mentioned, once I have that thesis and my levels, I go to my 1-minute charts to enter that setup. I may even confirm or add to that on the 15-minute chart. Usually, typically, on most instruments, if I've gone in on the 1 minute, my stop is going to be 20 to 25 pips max. On more volatile instruments and on smaller, or on majors, usually probably 15 pips. The profit targets are usually going to be measured moves, range expansions. In some cases, it may just be 50, 75 pips if it's high day, low day. And again, that depends on the instrument that you're trading. I do not trade the news releases themselves. One of the good things about the New York Open specifically is that it is after major news is on the calendar. We get the odd one, Fed. We had one the other night at 10 a.m. New York. Those are unusual. Usually most of them are at 8:30 a.m. New York time. If you trade the news, that's all your choice. I don't trade the news. Most trades are done in an hour. Somebody asked me the other day, I know you said sometimes you're at the screen, you can be in a 3-hour window. Once the trade is going, you're usually in the money in 15 minutes. If you're not, you're either in early, you're wrong, or there's just no trade. So these markets will typically explode in the first 15 minutes, and in some cases I have preset levels and I'll go to break even, and in some cases I need to walk away because I do not want to watch the price action after that. If it's exploded and confirm my thesis, I'll have one level to take profits and another level to let it run if it's a measured move to come back and check it later. So again, know what your best trade setups are: trend trades, reversal trades, and trading ranges. So just to reinforce as well, you don't have, this is how I trade. These are the reasons why I trade it. I've talked about it in all the other videos. My way is not the only way. I'm talking about me coming to the screen at a set time each day, looking at the price action as a box, making a decision. What type of day is it? Is it 3 levels? Is it a buy low of the week opportunity? Is it a sell high? Is it in an all-day fade, a reversal day, or is it a do-nothing day on that particular instrument? So whatever, how you trade is entirely up to you. I've always said this: if it's traders are making money, that is their only objective, and there is no right or wrong way. It's just whether or not it's working for you. My objective was to focus on scalable trade setups and keep refining that and peeling back the garbage trades, getting out of piker trades, not chasing moves. I'm looking for opportunities when the market is set up a high and a low, and they're going to make a range expansion, a stop on a reversal trade, or a trend trade. Simple as that. So it doesn't matter if you come and look at the euro and you draw your high and low prior to the U.S. market open. Any day we're at the high of the week, we've already taken out the previous day's high. We've locked in the high. On any day like this, if I'm trading New York, I'm looking for 3 levels of rise. If I'm looking for a trade opportunity, I need to have that first hour come back into, that was payrolls Friday, come back up into a level for me to sell back down. We're inside first red day on the euro on the Friday. There's an opportunity for people to sell high in the Europe-London window. If I was to trade this in New York, the same thing. I would be looking for, I'm back inside, I'm only looking for a move back down to the low of the day. So obviously the thesis again being the high of the day is locked in. Now I'm only shorting on that last level. This would be a scalp trade down low. I'm only using the euro as an example to paint the picture that regardless, I'm working from the outside. There's my high. There's my low on the day. They've already locked in the high. They've come down. I'm looking for the scalp trade back down to the low for 25 plus pips. In a situation like this, I know the market's going to potentially have a second move down lower, but I'm just in that for the session trade. I'm in and out. Day one. So day one's above the blue tracer, the previous day's high. We got trap volume above. Day one, first red day. Day two, down, new low again. creeping trend down. We're making new lows. Remember, I'm just coming in New York. I'm looking for the creeping trend buy low opportunity at the low of the day. Why is that? Because when New York opens, we're at the low of the day, at the low of the week. We have a creeping trend down. This is all order flow for a potential explosive reversal trade. Now, again, understand, I don't just get in and buy the low. We have a triple bottom right into the last 15 minutes prior to the New York Open. Again, we're looking at the euro, so no news on the calendar. No real reason for this market to react violently around the New York Open, but the market can certainly move around the New York Open. So we have an opportunity to gain triple bottom, engulfment down low. Not even putting my numbers on here. I just want to demonstrate the setups. This market is at the between 50 and 75, but again, coming back to our 15-minute chart, we have the previous day's breakout level as a potential area for that market to target, which is, funny enough, our high of the day in the London session. So remember, I'm coming to the screen looking for setups. I'm not going to the screen trying to trade moves. I'm looking for the market to set up over the course of the day and offer me the best opportunities. It doesn't matter what instrument you look at. You can look at the Canadian dollar. Any instrument. It's the same approach. I have a high, I have a low going into the U.S. session. This is before we even get into New York. We've already broken the previous day's high. The market creeps down. Then I'm looking for an auction back up prior to the New York Open. We auctioned back up in that first hour above the previous day's high, and literally, I'm just looking for simple setups. I want to get filled near the end of that hour into the New York Open. We've got our peak formation, our locking in of the high at the previous day's high. We're at double zeros, 2,600, and our thesis is that we're targeting the low of the day and potentially the low of the previous day. Remember what happens when we get breakout traders in the market. We got other time frame traders in there, 4 hour, daily, weekly, whatever. And below these levels are stops. Those stops equal money. If we target all the way, we got breakout traders. Their stop initially may be at the low of the previous day. Hit the stops, trend the market. Trap volume up high, 3 levels, 3 sessions. It's all straightforward. And it's just coming to the screen, knowing what you're looking for. But you can understand now if you're trading, maybe you're not trading the Canadian dollar during Europe or London, but when we get the day set up, now I can form my thesis for the bigger trade opportunity. Gold was an excellent trade yesterday, and again, just using 15-minute charts, we have a high on day 2. Day 1, again, somebody's asked me, I don't understand you said Monday's day 1, but you can have a day 2 trade. And so day 1 is when I look at day 1 when we're break a level at the high or low of the week and it reverses. That starts the move in the opposite direction. What confirms that is that on the second day we break a low. So day 1, peak formation high. Day 2, we've broken the low. It's Monday, which is day 1 for the new week. That's the high of the week. We had a sell high opportunity on Monday right at the beginning of the US 12 candle window. And again, as I mentioned yesterday, if you came just for the New York Open, your trade is already locked in the high, gave a bull pin for a measured move down through the low of the day. And these are little things to pay attention to. When you notice you get a nice clean rectangle like this, the lows or highs are suspended above or below the numbers. They're getting people caught up higher for a move down and vice versa on the long side. But yesterday was a great example. Again, we won't get into talking about measured distances, but you start to understand all these distances are calibrated from high to low, how far they move it. We had a high, we had a low. They locked in the low in the London session for beginning the move up. This move down at the first hour is a 3/4 retracement of the high-low of the London session, trading session. But even just using our 15-minute charts, we have first hour down, engulfment, and then New York Open pin hammer for an explosive 50-pip move back through the high of the day, which is over in 15 minutes, which again you'll notice if we project the previous night's New York short trade across, that explosive trade up was a stop hunt into shorts from Monday night's U.S. session. S&P is just been giving some phenomenal moves, and I really just reinforce with the indexes, although there's lots of movement, that the best trades will come once that New York market opens. And knowing beforehand, being prepared, having your levels. We had a nice creeping trend down on day 3, again day 1 Friday above. We had trap volume up high, rate on the rollover on Friday morning into the London Open. Day 1, we had first red day trade, a high of the day on Monday, and we had a creeping trend down through Monday and Friday's low, making new lows, pulling back, making new lows, pulling back, and then making a low in the gap time and rate 15 minutes just before the New York market open. We get a nice little breakout trigger right at the low of the day. Day 3 down, massive explosive move right back through our lower highs. So again, we got the high of the day. I just draw it on the wick, and you'll notice that this market again extended up through the high, taking out the pin high. And I haven't gone into too much detail about this, but that is a 25% expansion above the range, which again, one of my mentors, Bill McLaren, false breaks, most stop hunts will end 25% above the range. If it goes beyond that, you're in a 1.5 expansion. That's a different trade situation. But in a move off like this, 3 levels down, an explosion, timing window kicking in, we're right at the end of our 12 candle window. We've gone 25% above that range. That's a 600 pip move over in 1 hour. So again, down here, getting in on the 1 minute, it was a 100 pip candle. Getting in just prior to that was a 25 pip stop loss. Now, not saying one's right or wrong. The move that moved a 100 pip candle, this 100 pip candle at the low, right here, you'll notice that's when New York opened. It was a 100 pip candle. They just sort of wicked into the low bear, which we had a nice little engulfment right at the end of that 15-minute bar just prior to New York opening. But that 15-minute bar, if you understand what they've done here, is they've trapped that entire first hour creeping trend down into the low after 3 sessions down, 3 levels down, 500 pips down, back through the low. This candle engulfs the entire range. They are not coming back. They are not letting any of these people out. They're all trapped, and this market now is going on a massive run. As I said, a 600 pip move back not only through the high, but for a 25% expansion above there, clearing out shorts from the day before. So again, my emphasis is mainly on New York. Actually, I should rephrase that. It is only on New York. The opportunities and the trade setups that are there on NASDAQ, oil, again, oil, massive explosive move off the lows inside of the blue tracer after 3 pushes into the low, which is a quarter level. And again, if you measure these markets, you know your instrument. This was a 150 pip box to the blue tracer from the previous day. So again, just measuring and knowing that the market is fulfilling that 75, 150 pip. Again, depending on the instrument, could be 250. That's 3 levels of drop. 1 push, 2 push, 3 pushes right into the New York Open, bullpen explosion, 200 pip move up. Obviously, they came back down outside of the window, but the opportunity at the New York Open was there. You're done in 1 hour. So there's plenty of great trade opportunities. The difference between looking for explosive trades that build up when a larger consolidation builds over the course of the day are my focus. I'm not looking to scalp these smaller moves. Again, less time at the screen, 3 levels of rise, you're done in half hour, 45 minutes, 15 minutes, whatever. Very little to no stress. It doesn't matter what instrument you're trading, but if you're looking for scalping highs and scalping lows, that can end up being frustrating because you get in, you get stopped out, because the market's still building the box. And I'm looking for that larger geometry. That's where the energy will come for explosive moves, where you're in the trade on the smaller time frame, it explodes away, and now you're looking at 5, 6, 7, maybe 10 to 1 on some of these trade setups. So hopefully that answers some of your questions. If you're, people still asking about 3-push patterns, 3-hour high lows, all these things, you need to go and look and study your charts. Where is the money? Great example this morning on gold. The trader that was long last night on the bullpen hammer, they've dropped this 75 pips from the high into that trader who was long last night and got them out at break even. So again, just some simple concepts about what the market is really doing. It's auctioning from one side of the money to the other. They build up volume, they trap it on one side, and when it explodes after 3 sessions, the likelihood of that coming back is, not until they've really done they might margin somebody out first. But just even noticing between yesterday's high and today's high, we have a space. Now, I have no idea what this market's going to do. But if we end up getting a buy-low setup inside in the U.S. window, they might lock this in and London might roll around for a long trade later. We got volume getting trapped lower and lower. Now, if they were to break down lower and come back up, we'd be looking for the sell setup possibly back to yesterday's low. Don't know. Don't care. I just know that when I come into New York, I'm going to have a high and a low, as we did yesterday. We had a high and a low. We had the higher low. We had a 3/4 pullback from the high. That was a 100-pip drop. Right at the end of the hour, a bullpen hammer for an explosive move on the gold chart. So the simpler you make this, the more reproducible and duplicatable your results are. I'm focusing on scalable trade setups. I want to be able to grow those trade sizes, and when you get into days that are possibly choppy or lower probability, or fade days or creeping trends back in the other day, I'm happy to again take that trade. It's a scalp trade. It might be a session trade still for 50 or 100 pips, but that's different than maybe say a first day trade or an explosive move after a creeping trend for a vertical trade back in the other direction, where those trades have the potential to go measured moves. Keep it simple, traders. Have a great day. Thanks for the questions. Appreciate all the comments and feedback. Keep getting better, and may the markets go with you.